Alrighty, I think we get started then. Good afternoon, everyone. Excited to be hosting this event today, and thank you all for joining us at this time. So we've had about 150 people who have signed up, and looks like a lot of them are here right now. So thank you so much for attending so far. If you're currently live and watching this event and attending, please go ahead and use the comment section, which you can find on the right-hand side, right? Use the comment sections, tell us where you are, right? Tell us which company you work for, right? So that we can all like get to know you, and we'll get started shortly. Cool. I think we're ready to go. My name is Ridwan. I'm the co-founder and chief product officer at Pluto Card. Just for a little bit more context, Pluto is the number one corporate card and account payables management software that is built specifically for finance teams in the UAE. With Pluto, companies are able to get unlimited corporate cards, capture receipts easily using WhatsApp, manage all of their account payables invoices in one place, and carry out employee reimbursements. Pluto is one of the fastest growing companies in the region and serves some of the best mid to large enterprise customers in UAE. Joining me today are two of UAE's best tax experts, right? Saqib Iqbal and Mohammed Umar. Saqib is the founding partner at SA Consultants, and Mohammed is a managing partner at SA Consultants. We're extremely excited from Pluto to be hosting this webinar, especially since both Saqib and Omar have extensive experience and a deep understanding of UAE's tax laws and regulations. Given their experience, they founded SA Consultants, which is now one of the fastest growing auditing and advisory firms in Dubai. It's also a part of the IGAL, which is the Intercontinental Grouping of Accountants and Lawyers. Welcome, Saqib and Omar. It's so good to have you here and have your opinions been shared with everybody here. Welcome. Awesome.
Thank you so much, Ridwan.
Thank you
Thank
so
you
much.
for having us and hosting this wonderful event. I believe it'll be definitely very useful and fruitful for all the audience, definitely.
Excellent, excellent. And I see some comments already coming in. Welcome to the live show, Sabi, and a few other folks who have joined as well. Welcome, everyone. Cool. Okay, so I'll just set the background a little bit before we kick it off. So the Strategic MENA CFO is a series of events that we are hosting with experts like Saqib and Mohammed to help share the knowledge about how the best finance teams in MENA function. Right. For our first sessions today, we'll be covering UAE tax laws, right, and how the registration process works, the difference between mainland companies versus free zone, who is exempt, who is not, tax rates, and many other like different topics. We'll end the session with some Q&A in the last 15 minutes where you'll be able to ask any kind of like burning questions that you have to our experts here, right? And to just set the background for this afternoon, Saqib, maybe you can tell us a little bit about how UAE's new tax laws has come about, right? And give some historical background about why this has happened and what the next steps are.
Well, Ridwan, I believe that when it comes to the tax laws and especially the new corporate tax law, it started back in 2018, especially after this bad thing. It's clearly, we can understand how the situation is going and where it is going, and UAE is definitely, trying to make itself as much as recognized as it is possible for the around the world, and especially when it comes to the comparing with the leading economies around the world. UAE's never been, like they are always there to support the local businesses, establishing themselves in terms of leading the market, and also creating worldwide those structures which can be synchronized and aligned with the international taxation and
Right.
all the laws. Now, this thing, when it comes to corporate tax, people will definitely have a lot of questions in their mind, and honestly,
Absolutely.
this is completely new for everyone.
Right.
People who have been working in UAE, before the implementation, of course, or maybe like 5 or 6 years ago, they don't have that kind of habit of following the rules and regulations when it comes to
Right.
laws and tax laws. But of course, it's definitely going to be a very exciting for everyone. I believe, especially for the accountants like us, we have something new, and everyone is trying to dig into the document which has been
Right.
released
Yeah.
recently, and there are a lot of questions from everyone, and
Awesome.
we'll try to answer them, of course,
Awesome.
as much
Cool.
as possible, of course.
Great. Thank you so much for the background. And yeah, just to set it a little bit more, in 2023, the UAE will begin implementing corporate tax of about 9%, right? And this is actually a significant change to the country's tax system, as the UAE has historically been a tax-free jurisdiction, right, for corporate entities. The new tax will apply for companies with annual profits that exceed more than 375,000 dirhams, right, which is approximately about like 100,000 USD, right? And the introduction of the corporate tax is part of like UAE's effort to diversify its economy and reduce its reliance on the oil revenue, right? The tax is expected to generate significant revenue for the region, right? And I think the future is pretty bright, even though I know many companies would not be happy about this right now, right? But anyways, let's get started on some of the nitty-gritty details of it, right? So the first thing that we'll cover is how registration of corporate tax works, right? So let's start with the basics, right? Who is required to register for corporate tax? Omar, maybe you have some opinions there.
Hi, thank you, Ridwan. So actually, any taxable person shall register with the corporate tax, and they have to do it within the timelines which will be prescribed by the authority. And hopefully, sir, very soon they will launch the portal or some other mode of the communication where we have to put our documents and get our tax registration number. So actually, every corporate have to have registered with the tax authority on the corporate tax, but there are a couple of exemptions there. But in generically, the a taxable person who is working here and as a as a permanent establishment in UAE, they have to have registered with the tax authorities.
Got it. Got it. I understand. And like, as a like, am I required to register for corporate tax if my business is in the free zone as well, or is it just mostly for mainland entities right now?
So generically, right now, the understanding from the law is that everyone who is having a company over here in the Dubai, they have to have registered with a corporate tax. Um, this is no such exemption on the basis of the registration. There are other exemptions, there are other things are there, but on the level of registration, everyone have to register.
Awesome. And we'll talk a little bit more about the exemptions in a bit. But, Omar, I think there's a lot of folks who might still not be fully aware about like what are the information and documentation that the businesses will need to provide to be able to comply with the corporate tax laws, right? Do you have, any opinions there? And is there like a list someone can follow up with?
Yeah, sure. There is a lot of things which is already provided under this tax law, which is issued on 9th of December. So actually, there are a couple on the, if we split on two levels, on the registration level and after the registration and other financial things which you have to comply with the law. So on the registration level, we don't have much information from the federal tax authority right now, but generically, if we speak on that one, most probably they will ask that all the legal documents of the company, they will ask all the legal documents of the ultimate beneficiary owner. And on the other hand, if we talk about after registration, when the things are moving on, so each company have to have their financial statements to be prepared, and their books of accounts should be according to the international financial reporting standards,
I see.
and that is mandatory. But there is one very important point which we I should mention, there is no there is no compliance till now there is no compliance that the financial statement should be audited, but their books of the account should be prepared according to international financial reporting standards, which are applicable over here in UAE according to the UAE laws and regulation.
Got it. And the financial reporting standard, that's the IFRS standards that you're mentioning, right? And so I think the TLD, the short version to summarize what you're saying is that the tax authorities haven't really given any strict guidelines on all the documents that are needed. But as a company, you can expect the same kind of documents as, say, opening up a bank account, right? That includes your like registration licenses, who your UBOs are, etc., right? And then from that point onwards, you also need your financials, and those have to be at the IFRS standards, and anything that is non-standard needs to be converted there. But the requirements for audited financials hasn't been mentioned explicitly yet,
Yes,
right?
it's not been mentioned, but the books of the accounts should be maintained according to the financial reporting standard, as well as we have to look into the tax laws. So local laws and international reporting standard, which are applicable over here in this jurisdiction, we have to follow those.
Got it. Got it. And in general, like moving forward, now that most companies know that they have to apply for corporate tax in the next year, what would you recommend that the documents be kept with the organization as per the guidelines?
So here we have to split it again into two parts. One at the level of registration, and one later on what organizations have to do and how they have to follow exactly with the corporate tax. So on the registration level, I already explained you on the registration level. Most probably these are the documents, company legal documents, company financial information, UBO, all the UBOs, or any person who are mentioned in any of the trade license, or on the civil company, or under the professional license, or under the commercial license. So that we have to have the detail. We need the detail of those things. But on the other part, if we look into the some other things, so every company have to maintain their books of accounts, and till, let's say, for the next 7 years, from the date of their first return has been filed, from that date till the next 7 years, they have to have maintained those records with them. And in between any of the time for that 7 years, the authorities can ask you anything.
I
They
see.
can ask you all your records. They can ask you any specific
Right.
thing among that financial records, or their supporting documents, or anything relates to that one. But for every proceeding year goes on, so the next 7 years you have to maintain the records for the last 7 year of all the taxation thing, all the accounting things.
That's very interesting. Because outside of UAE, many of the audit firms, they typically keep supporting documents and such for up to 5 years, right? But
Yeah.
the 7 year requirement seems to be something to be very mindful about, because this also involves like keeping track of your receipts, right? About a lot of that, right? So that's very interesting.
Yeah,
Yeah.
exactly.
Uh, I see that many of our attendees today come from both. It's a split between like mainland and free zone entities, right? So I can see some companies that are large group companies that have both, right? I know that the tax laws actually differ dramatically between the two, right? Sakib, maybe you can tell us a little bit what is the core differences between how taxes applicable to mainland entities versus the free zone entities, and how do UAE corporate tax laws impact the taxation of these two entities?
Ridwan, I think it's very important to understand one thing. It's very clear that when it comes to filing the return, registering and filing the return, so it is going to be, of course, across the board. So whether it is a free zone company or a mainland company, everyone has to actually register for the corporate tax, and they have to, prepare a corporate tax return, and they have to file. But for calculation purpose, when it comes to, for calculating the taxable income for a free zone person, when we say person, that means like a company. So they have to actually meet a criteria. We can call it a qualifying free zone person. So for that reason, they have to actually maintain adequate substance in UAE. That is the first criteria which has to be there. They have to actually they should not be elected to be subject to corporate tax. So election of subject to corporate tax is something which law has actually specifically mentioned, saying that if a company, individually, if they want to be subjected to corporate tax, and they can elect it to be, so they can, of course. And any qualifying free zone person, of course, they have to, when it comes to the qualifying income, and while calculating the taxable income or
Yeah.
taxable or liability. So in that case, there are still some of the cabinet decisions which are pending, and we still have to wait for the guidelines on calculating the qualifying, what is the qualifying income, how it can be derived, and all that kind of stuff. So for that reason, we have to wait. And also, they have to comply with the transfer pricing rules and the requirement of all the documents related to that. But I believe that when it comes to generally, when people are actually, if you refer back to the public consultation document, which was issued kind of before this law, so there were actually few things which operationally we have seen, we have gone through those implication of the free zone companies. The law actually states it's very straightforward. If you have if you are actually generating income within the UAE and you have the UAE sourced income, so you will be subject to, of course, corporate tax. But to gain the kind of exemptions and everything, specifically from the free zone point of view, we need to wait that what kind of qualifying income drivers would be and what kind of qualifying income guidelines would be. So for that reason, we have to wait for that. But of course, when it comes to registration and filing return, of course, they have to do,
I
everyone.
see. So it's interesting. So you're saying that in the free zone entities, there could be some exemptions made to certain companies, but those rules haven't been decided by the cabinet yet, and we're still waiting on them. Is that correct?
Absolutely. So there are things which definitely they can gain some exemptions, of course, but those qualifying income, that it is qualified income. When we say qualified income of a qualified free zone company or free zone person, so that has to be, of course, that's submitted.
I see. I see. Yeah, that's very interesting. That makes things very complex, right? For sure, right? Because, we have so many companies that are in the mainland entities, but we also have so many different kinds of free zone entities, right? We have the media cities, we have the financial centers, JAFZAs,
Lots of them, of course.
lots of them, right? So, yeah, I think the next year is definitely going to be a turmoil for a lot of the accounting professional, but, we have yet to see what comes out of it. But, just to follow up from what you mentioned about the differences, Saqib, how are transactions treated differently between the free zone entities and the group entities that are located in mainland UAE? Is there like a core difference between those or not? So essentially, I assume as a free zone entity versus a group entity that is also in mainland, there has to be some differences between the two, right? As how tax transactions are treated. Do you have any opinions there?
So what I believe is actually, if you look at the group structure, so of course, if within the group structure, if they have a company in mainland and if they have the company in free zone, so within the group structure, if they are doing any transactions in between the companies, so those can be considered as related party transactions, of course. Now, when it comes to related party transactions, so that there we have, of course, some of the exceptions. But related party is going to be a very complicated topic in that term. But what I believe is that the free zone companies specifically, if they have the qualifying income, specifically the qualified free zone persons, they will be definitely having some exemptions, or they will have some exceptions. They can maybe divide their income streams between kind of a taxable qualified a qualified income, a taxable income, and then they can calculate and they can prepare their returns.
I see. Okay. So there is a certain amount that is qualified income, and that will change how the transactions are taken into consideration for taxes.
Absolutely. Yes.
Got it. Got it. And do you have any kind of guidelines right now, general guidelines on what constitutes as qualified income for a free zone person today?
So far, it's not there, but of course, we need to wait for that.
I see. Okay. Did the cabinet mention any expected timelines? Are we looking at like Q1 of 2023 or?
No, it's not there. I believe it should be very, it should not take much time. I believe, because it's a huge thing and huge topic. So we should receive anything very soon.
Got it. Got it. Okay, sounds good. Cool. So following up with one of the key things that you mentioned, Saqib and Omar, you mentioned it as well, which is that there is certain types of individuals that are considered as exempt persons, right? And that is quite interesting because that heavily impacts whether they're going to be taxed or not, right? Do we have any understanding right now on what are the exempt persons according to the new corporate tax laws?
So actually, if we look broadly and in that aspect of the exemption on entities level, so there are a couple of exemption which the law describes. Like if there are government entities, all the government entities are exempt from that one. There is no corporate tax on the government entities. The second level, if we look into that one, then the government controlled entities. So any entity like which is owned by a government entity, it's not directly a government entity, but it's owned by a government entity, it's controlled by a government entity, it's also exempt. Any other like extractive business, like they're dealing in extractions of minerals or something like that, they are exempt. Any qualifying public benefit entity which are doing the work for the like public benefits and all thing, but on that level they have to have qualify for that particular thing. They're qualified for the public benefit. Unqualified public benefit entities should not be exempted. And then there are some qualifying investment funds. Alongside with the qualifying investment funds, there are some qualifying investment funds manager who will also be exempt on couple of things. So these what I'm highlighting one by one the things. There are certain like set rules and regulation for each criteria. Whatever the
Got it.
criteria, like if someone is under the public benefit entity, then there are some specified like prescribed preset rules on which they have to have like meet those areas to be an exempt. And there are some others as well, like if any company or any entity who is owned by a person who is already 100% exempt person,
Mhm.
is an exempt and he is owning that thing, or that entity is owning that thing, they will be exempt from that one. So
Got it.
this is some of the exemptions which law allows on the level of entity. This is, and on the level of entity, these are the exemptions.
Got it. Got it. That's very interesting. So I noticed that we have about 58, about 65 people who have joined the event right now. So welcome to everyone who has joined the event. Just a quick thing: if you have questions, please leave them in the comments. We will answer them at the end of the call, right? And at the same time, if you'd like to interact with the rest of the folks here, please let us know where what company you're coming from and where you're located right now. But Omar, thanks for sharing your opinion there on the exempt persons. So I'm just going to summarize what you mentioned, right? So you mentioned that co- corporates that are exempt right now, these include companies like that are government entities, that are
Yes.
controlled by other government entities, right? Extraction of minerals, so companies that deal with the extraction of like natural resources, qualified public benefit entities, right? And this is something that they have to be qualified. So there is a particular like set of criteria they need to go through to be able to qualify. Unqualified and public benefits don't really fall into this category, right? Qualified investment funds and also the qualified investment funds persons. And the final thing that you mentioned is that if a person is 100% exempt, right? Any entities that they own or any level of entities that they own, those are also exempt. Is that correct?
Yeah, that's it. And there are couple of like set forbid for that one,
Mhm.
pre-prescribed rules on that one. On that area, they have to be fallen under that one, then these all will be exempted. So under each category there are some certain rules and regulation which they have to look before claiming themselves as an exempt.
Got it. Got it. I see. Okay, that's very interesting. Yeah, and it's surely very complex for sure, right? Okay, jumping into the ideas about tax rates, right? I think there's a lot of confusions there about like what is tax, what is not, what is the applicable tax rates, and there's a lot of different criterias there. So jumping into that process a little bit, what is the process today for determining the taxable income for UAE corporate tax? Is there like a strict process there?
When it comes to the corporate tax income and determining that if it actually qualifies as taxable, income, so the criteria is very simple. If so, we have to come through the top to bottom approach. We have to see that if the taxable person is a resident taxable person or a non-resident taxable person, and if that actually falls into that criteria, then we have multiple categories where we have to see that if that one resident is actually technically has as a incorporated company or not, how it is being performed, or it's a natural tax person, for example, like a sole establishment and all that, and if there is any other thing. But if it has, or any taxable person has a UAE sourced income. When it comes to UAE sourced income, so there are, of course, where it is, or that income particularly is being derived from. So, for example, if that is a resident person, then yes. If there is some exception, of course, if that is a non-resident person, but related to a permanent establishment of kind of a non-resident person in UAE, and that income is generated by that permanent establishment, then it becomes, of course, UAE sourced income. Then we have another category where we have to look into, for example, activities performed where assets located, kind of capital being invested in UAE, rights issued or services or performed or benefited from UAE. So there are so many different angles or examples to this one particular thing. So, for example, if we say that the income coming from sale of goods, of course, it's within the state, within the UAE, that is a UAE sourced income. When it comes to income from a provision of services, then again, same thing. When it comes to income from disposal of your shares, you have offloaded your shares,
Right.
or capital of a resident person. So anything which particularly sourced from UAE will become a taxable income in terms of showing and reporting to the local authority. There are so many other things. So, for example, when it comes to interest, particularly. So interest, which actually technically has to meet certain conditions for specifically falling into that category of taxable income. But there are things, if generally the income is being sourced from UAE or within the UAE by either by a resident person or a non-resident person, or by performing commercial activities within the UAE, that becomes taxable.
Mhm. Wow, yeah, that is quite interesting. Thank you so much for sharing that. We had a question that came in just now that I thought would be relevant to this discussion that we're having as well. So Wada is asking if a free zone company has no business in the mainland UAE today. So that is like, for example, all the revenue is not generated from there. So the revenue is only being generated in the free zone entity. Would any tax still apply to it? Does it still need to do they still need to file the corporate? I feel like I have the answer for this, which is that they still need to apply for it, right? But Saqib, you can keep me honest here.
So let me just reconfirm. So the question is related to the income generated by a free zone company, right?
That's correct. Yeah. So the question is that this entity has two groups, right? So they have
Mhm.
one in the free zone entity and one in the mainland entity. However, all of their income comes from the free
Mhm.
zone entity, right? So the question
Mhm.
here is that would any tax still apply to it?
So first thing, of course, the corporate tax registration part. So that's very pretty much clear and straightforward. Every single company being registered in UAE has to register for corporate tax, and they have to file the return. That is one thing. But when it comes to the corporate tax rates, because there are two levels of corporate tax rate, one is basically 0%, and the other one is, of course, 9%. Now we need to see if the free zone company or free zone establishment, which we can of course say a juridical establishment having like LLC license or any other form of license within the free zone. So in that case, if that free zone company has a qualifying income, then of course we can say there could be some exemptions and exceptions attached to that, which we are still waiting for that. But again, generally they have to, of course, register, they have to file.
Hmm.
But does that 9% would apply, for example? We need to see. We're still waiting for that. So we can't actually
Right,
say anything on that, because
right,
if the qualified income streams are, your particular revenue streams fall under that guideline, so of course you can get some exemptions. But
right,
0% and 9% criteria is pretty much clear. So anything over and above 375,000 dirhams has to be taxed at 9%
right.
for, of course, if it is a taxable income.
Right. So Wada, to answer your question, and Saqib, just to summarize what you mentioned, is that regardless of whether your income's coming from the free zone entity or the mainland entity, you do have to file your corporate taxes. You do have to get set up, right? And you do have to do that next year, right?
Absolutely.
However, based on the tax exemptions that we talked about, right, before, your qualifying income stream may be 0% or maybe 9%. It really depends upon what type of income stream that is, right? But you won't be able to find out unless you actually start filing those corporate tax and looking into it. Is that correct?
That's correct.
Yes,
But
that's correct.
if the income is, of course, sourced within the UAE, so which is completely clear, of course, that becomes a taxable income. So if but there could be so many different, of course, angles to have to be considered by the free zone entities, because why people open free zone license. That's very important to understand. If they have internationally, they have some income being sourced from outside the UAE. Maybe they have branch outside the UAE, or they have opened a branch in free zone from for a company outside the UAE.
Got it.
The actual application or implication of corporate tax will be on the source of income. If the source is within the UAE, then of course it will become taxable. If the business activity or commercial activity is performed outside the UAE, then of course there could be a question mark. But then we have to see that if that is being performed outside the UAE by a company residing in UAE, then it becomes, of course, taxable income.
Got it.
Because then they have to combine whole income altogether within under that one company. They have to bring that income under that one financial. But if there is some out of scope activity, because there are three categories we need to understand. Again, I think it's really important to understand for everyone, because when we go back to the corporate tax part, let me just briefly explain this.
Yeah.
So there are, for example, when three categories of taxable or non-taxable persons. For example, one is the exempt person, which Umar actually mentioned earlier, that who is actually exempt. The second is basically out of scope person. So for example, a company residing maybe here in UAE, but they are doing the whole business activity outside the UAE, or they don't have any kind of application or guidelines on that one particular company or their type of business. So they could be out of scope persons, but the taxable persons could be of two different categories. One is resident and the other one is non-resident. Resident means, for example, a juridical person which is incorporated in UAE through, for example, having the LLC license, any other form of license. Then we have the second category, which is where a juridical person, I mean a company, if they are incorporated out of the UAE, but if they are controlled and managed within the UAE, of course, that becomes taxable. Their income will become taxable,
Right.
kind of income. And they might have to, of course, they have to file the return. They have to report the, numbers to the
Right.
authorities. Then we have the third category, which I earlier mentioned earlier, which is natural person. That natural person means a sole establishment, sole proprietor kind of companies or civil company. So, of course, even if they are living outside the UAE, maybe they are not living within the UAE, of course, if they have a UAE related business income, that will be subjected to tax. Then we have, of course, the fourth category, any other person other than these three. Then maybe there will be some guidelines to be attached. Maybe we need to wait for other guidelines for that. But a company which is a non-resident or a taxable person which is a non-resident, how they can become, so how they can be subjected to corporate tax. So then we need to actually look into the details. So for example, if they have a permanent establishment within the UAE, of course, we need to understand what is permanent establishment. There is a criteria attached to it. I think we can discuss it later. But if they have a permanent establishment within the UAE, those non-resident taxable persons have to actually, for any particular UAE sourced income, that will be subject to tax if they have a UAE sourced income. And then we have, if they have any state sourced income, then also then it becomes subject to corporate tax. If they have any other link, if they have any other nexus, they've specifically mentioned this. So that also become, taxable in this particular scenario. So question for going back to the same question, for example, when we say that if your establishment is within the free zone,
Right.
and would you file the return? Yes, you will file the return. Now,
Sure.
question is that your income will be subject to tax. Then, for those qualifying income streams, we
Right.
need to wait for the guidelines. But generally, if your income is being sourced within the UAE,
Right.
then yes.
Right. Yeah. So I think it's pretty like I know it's fairly complex, but I think the whether you're taxed or not, there's a clear answer to it. Is your income related to the UAE in any way, right? If it is, chances are most likely that you will be taxed here, right? Of course, like the qualifying income streams and others, we'd have to do like a deeper dive on your particular income stream to be able to tell. But most likely, if you're making your money in UAE, right, as a company, most likely you would be taxed. So, Wata, I hope that answers your question. I know Sakib went pretty deep in it, but yeah, let us know in the comments if that answers your question over there. Um, Jumping into back into the tax rate discussion, Sakib, we talked about taxable income a little bit, but we're also hearing that there is a possibility of getting tax credits, right? And which obviously is good news to a lot of the companies here. What are tax credits, and what are the kind of like available tax credits that UAE corporations can use to reduce their own corporate taxes?
For specifically for the corporate tax credits, when we say the only tax credit, I would say we have to understand what is tax credit. The tax credits are only available on the foreign tax credit, we can say. So, for example, if you have a group company residing outside the UAE, or you're getting any tax credit from outside the UAE, so that tax credit can be, of course, be adjusted while calculating your, of course, taxable, of course, taxable net profits. In other words, but there is a particular criteria attached to it. So, for example, the foreign tax credits will be allowed to taxable persons only. If they are not taxable persons, so of course they will not be allowed. Now, the foreign tax credits cannot exceed specifically to the from the UAE corporate tax. So, for example, if they have a corporate tax of 100 dirhams, which they have to, of course, pay, but they cannot have a foreign tax credit of 110 dirhams. So that cannot be, of course, exceeded. Plus, the foreign tax credit has to be related to one particular, in reportable period. They can no company will be able to carry that forward to the next year or next reportable period, or they cannot actually keep the unutilized foreign tax credit, or they cannot actually carry that back to adjust anything from the for the current period. Maybe that is related to the next period, so they have to adjust it against the relevant reportable tax period. So those foreign tax credits, of course, they can, of course, everyone, any tax credit specifically, they can adjust. But if you are referring to the adjustable expenses, that's of course a different topic, and that's a different debate. So we can, of course, discuss that.
Perfect. Sounds good. I think Janix, I might be pronouncing your name wrong, Janix, so forgive me if I am. But Janix had a quick clarification question, right? So she was talking about the fact that we're discussing corporate tax, but we keep mentioning the term person, right? And how is that related to the ownership of the company in UAE or any person earning income from the UAE? I know we talked about, for example, in tax exemption, if a 100% owner who has been exempt, their entities also are exempt, right? So, Sakib, maybe you can help us like touch base on that a little bit. How does the person relate to the company and vice versa?
I think this needs to be very clear. When we say person, that means that means establishment. So there are two things. Of course, the corporate tax is about corporate tax income. It's very clear. It's very straightforward. When we say person, that means we are talking about some establishment, a form of establishment. That is why we say taxable person or a non-taxable person, or when we say resident, from the point of view of tax, not from the point of view having a kind of residence visa here. It's not like that. So if a company or establishment which is a resident in terms of tax, we are saying, of course, we are calling them person. Or a natural person. When we say natural person specifically, so we say a sole establishment or a sole proprietor license formed within the UAE.
Got it. And for the sole proprietor and the juridical person and the sole proprietor, right? Corporate tax applies to both of them, correct?
Absolutely.
Got it.
Absolutely.
So, Janex, hopefully that answers your question. I know you also asked about the sole proprietor versus the judicial person, and just to put it into context, corporate tax does apply to both. So, hopefully that answers your question there a little bit. We've been having some more questions regarding the 375,000 dirham threshold, right? Hiba was asking, it's not fully official yet. Is that correct? Is that still true? I thought that it was very well established because it was part of the document that the UAE tax FTA had posted. But is there any possibilities of that being changed, you think?
There could be some possibilities, but of course, based on the public consultation document, of course, it was kind of $100,000 or 375,000 dirhams.
Got it. And Mariam, to answer your question, so Mariam had asked, are the companies in free zone under 375,000 AED exempted, right, from taxes? Is that true, Saqib? I think the answer here from myself is that below 375,000 dirhams, you don't have any reportable profit that is more than that, right? So because that is the threshold right now, chances are that you will not be taxed on that, right? Is that correct, Saqib?
That's correct. So below 375,000 dirhams, that is basically 0% tax. So anything over and above 375,000 dirhams will be taxed at 9%. But when it comes to defining it, so for example, there could be mainland companies, non-qualifying free zone companies, permanent establishments of non-residents. Then of course this particular criteria applies to that. But then there are other qualifying free zone persons. When we say persons, like companies, of course, then 0% on qualifying income. There is no such threshold to that attached to that. So that means if you have a qualifying income within the free zone establishment, so that would be 0% tax. But if you have taxable income under the same company, definitely that'll be taxed at 9% straight away.
Got it.
But
So there's
I think there should be one more clarification on that. I believe in the question they use word exempt. It's not exempt. Either it's zero rated or it's 9%, but it's not exempt. You have to be very clear on that one. And where
Yeah,
if even
everyone
if
has
you are
to
zero,
qualify.
yeah, if you are on 0%, still you have to report. The
Hmm.
reporting is there. You are not exempt of the reporting. You are not exempt of filing the return or getting the registration. You are not exempt of that one. It is just either you have a tax of 0% or 9%. There are two slab rates, but the reporting is exactly the same way. You have to report each and everything. You have to report under your tax return.
That's a really, really good point, because I think some people might think that because they don't cross the 375,000 dirham threshold, they don't have to file the taxes or they don't have to register. And that is absolutely not true, right? So regardless of what your income is, if you are a company in UAE, you have to file for your taxes, right? Whether or not it will be zero rated or 9% rated, that will depend upon the threshold, your qualifying income, and your taxable income as well, right? Which are very different things. So yeah, so make sure you file your taxes, and Saqib and Omar, like for as SA consultants, you work with clients that are both small businesses to mid businesses to large enterprises, right? So I assume the clients that are coming to you today to be able to establish their tax operations, right? They range from all of the spectrum. Is that correct?
Absolutely. So we have a huge range of clients coming from SME to corporate, and but at the moment, what we are actually getting, or the response what we are getting from the market is where the corporations are more into trying to be more aligned with the corporate tax law, and they really want to be kind of aligned with the structural. If there's any structural approach they have to do, or if they have to change their legal structure, if they have to change their corporate structure. They've already been trying to do that. But on the other hand, what is more important here to understand that most of the companies coming to us are actually coming for the health check kind of work, where we actually dig into their current structures. We try to, gather a lot of information, the type of licenses they have, if they have good group structure, if they have companies outside the UAE, within the UAE, the branches, or anything specific. Then we are trying to, work very closely with their finance department, with their tax department, if they have, and trying to, establish a complete structure there where they can be more aligned, they can be more synchronized with according to the corporate tax laws.
Understood. Understood.
I think we should consider one very important thing, because previously in UAE we are only having VAT, value added tax. So
Correct.
there is a huge difference between the VAT and the corporate tax, because VAT is a tax which is only affect two of the accounting heads. One is your taxable sales and your taxable purchases. So VAT input and output. But corporate tax will change the whole dynamics of the financials of your accounting, of your tax regime and return filing, because corporate tax almost hit each liner item of your accounting and bookkeeping, each liner head of accounting and bookkeeping in your books of accounts. So you have to be considered on each level, that where how you have to treat with multiple things in shape of expenses, in shape of income. So all those things are very much important to understand, that it's a complete restructuring. It's not just a liner item you just put in and that's it. You just put in 0% and 9% and that's it. You are done with that. It's not like
Got it.
that. It's a complete restructuring of the accounting system. It's a complete restructuring of the taxation system within the companies, within the organization. So that is very much important to understand.
So basically, the income tax or the corporate tax right now is different from the VAT registration tax, right? And I think Janex had the question, which is that are they going to share the same tax number at all? Like, you know how you have the VAT registration number versus your like tax number. I assume that's not the case, right? I assume these are going to be two separate things.
Specifically, look for particularly for when it comes to VAT. VAT is something where it's already, most of the people actually know that their income, they have to calculate 5%. They have to charge 5% on top of their price, and then that is called like output VAT. And then we have input, where they have the qualified expenses to be adjusted as input expenses. So they most of the people now already know what they have to do. But when it comes to, of course, corporate tax, so corporate tax will be applied to your profits, the net reportable profits, and those has to be properly calculated. There is a huge difference now. For example, I can give you a very quick example. Your entertainment expenses, those you can only adjust up to 50%, not the entire budget, or
Not the
the
entire.
entire expenses you can just adjust it. No, you can't actually do that. That means there'll be a difference in your management reporting. That means maybe the audited reports or maybe the management reports, whatever you actually do that within the organization, then you have to maybe keep it, or maybe you have to bridge it with your corporate tax calculation. So both will be slightly different in terms of reporting. So in that case, you have to keep track of every single expense. You have to understand if that this one particular category, starting from the revenue streams,
Got it.
goes down to the net profits. People will have a lot of different types of questions around that. Maybe they have to start understanding that something is adjustable or something is not adjustable. Something is exempt or something is not exempt. So they have to understand that in their particular business, they have to start restructuring of their books of accounts. They might have to keep separate two separate books of accounts, and then they have to bridge them together so that they can, if somebody have to reverse it, so they can easily go back and see that, okay, what was the number and how much it was being adjusted.
Got it. Got it. That's yeah. Thank you so much for answering that. I think Janex also replied saying thank you for that because it was a very good detailed answer. Really appreciate that. I'm having some questions here from Hiba, from Maruf, and Ahmed as well regarding the 375,000 threshold, right? So one of the questions that has come up here is the 375,000 dirham threshold based on total revenue, or is it based on operating profit?
No, actually, it's not based on the revenue, and it's not based on the operating profit. When we talk about the net profit, it means the profit before interest, tax, and dividend. So the net profit before these three treatments, the net profit of that net profit will be considered as a benchmark to apply like a tax rate on that one. So that is very much straightforward. It's not VAT, so we have to be very clear on that one. In VAT, we are talking about the revenue, and revenue means sales, taxable sales. But here we are talking about the profits. So profits mean net profit. But which net profit? Net profit which should be before interest, before dividend, and before taxation. And then there is a treatment for the interest and the dividends and the taxation, and then we'll go on the bottom line of the accounting profit, accounting net profit. So this is how it works actually.
Got it, got it. So to summarize, it's not on total revenue, it's not on operating profit, it is actually on net profit, which is the profit that you calculate before interest, before dividends, and before taxation. Is that correct?
Exactly, exactly,
Okay,
exactly.
awesome. Maruf, hopefully that has we were able to answer that question for you, right? And again, if you need any help, we have SA consultants here, right? You can reach out to them on their website. We will post some links to their website soon as well, right? And they would be able to help you out there. Cool. So one more thing that Mariam had asked earlier is that the 375,000 AED threshold, is that on a yearly level or is it on an overall across the years? I assume the answer is yearly, right? On a yearly profit.
Yes,
It is actually. It has to be 375,000 dirhams reported, net profits. Those has to be calculated, or that has to be related to one reportable period. So
Got it.
that has to be a reportable period. For example, like 1st January till 31st December, or like maybe like 1st July till 30th of June, or something like that. Any specific period, that is the internal matter. A company, because already companies have their specific kind of
Year end,
reporting
like
periods.
when, yeah.
So exactly, so whenever their year end is, so for example on 31st of December, so they can have 9 months following that reportable period. Within those 9 months they have to file the return.
Got it. I see. Okay. So there's no like strict time on what you consider as a reporting year. It's just that whatever your company's accounting policies are of when you consider it to be a year end, the trailing 9 months is what you need to account for and start filing the taxes for that. Is that correct?
Not for those 9 months. You will have 9 months period to file
Got
the
it.
return
Got it.
for the previous reportable period
Got
of
it. Got
those
it.
12
Got
months.
it. Okay.
So it's basically to give ease to every business, because everyone has different reporting periods. They have internal structures, they have internal deadlines, guidelines, and everything. So UAE has actually given that kind of
It's very
ease to every
generous. Yeah.
business. Exactly, it is
Very
absolutely it
generous. Yeah.
is. Because when we people like me and Omar, we come from a very text-ridden kind of countries, and we know that how it actually works over there. So they actually give you a deadline. You have to file on this thing, and then there is nothing which you can change.
Yeah.
But here, UAE has actually been very generous. The government has actually given that kind of flexibility to the businesses to align with the corporate tax law, with the corporate tax requirements, according to their internal structures. So
Absolutely.
that's
That's
absolutely
actually
great.
that's very generous. Yeah.
but
And
that's the detail we have till now. If something comes tomorrow, we cannot say anything,
Nobody knows, of course,
because
Got it.
absolutely.
if
The
they
things can
if
change,
they
of course.
yeah, if they strict something like that, you have to have follow this tax year, then every company have to follow that tax year.
Absolutely, absolutely. So that's so Mariam, to answer your question, your company may have their year end date set at a particular cadence, right? So whatever that cadence is, you would need to file the tax for that reportable year, but you would have 9 months from that year end, at least with the current laws, to be able to file that tax, right? There's no strict deadlines when it needs to finish. You have 9 months from that time onwards to be able to file that. Awesome. Okay, so hopefully that answered your question, Mariam. we have Khalid and Ahmed here who have asked questions about double taxation relief. So Khalid and Ahmed, this is actually a very meaty and big topic, right? There's a lot of nuances there. So we will actually be doing another webinar in the upcoming few weeks and months with SA consultants as well to be able to cover this deeper topic. So hopefully, please, follow the Plutocart page, follow the SA consultants page. You'll be able to see when we talk about that. But yeah, it's a very big and detailed topic that we need to spend a whole session on. So we will not be covering that today. Awesome. Okay. So I have some questions from Siddiq, right? And one of the questions is that is the threshold on the basis of net income or on revenue? I have the answer to that, and you guys can correct me if I'm wrong, which is that Siddiq, the threshold is actually based on your net profit, which is before any deductions, any interest, and any dividends that are giving out. It's not based on net income, or it's not also based on revenue. It's just based on net profit. Okay, so hopefully that answers your question. Correct? Am I good to go? Yeah.
Absolutely.
Brilliant.
You've already learned a lot during just in 1 hour.
Awesome. Sounds good. Perfect. Awesome. Let me see if there are any other questions. Mariam had asked, how do you file your taxes? Is there any kind of format that you need to generate it by? Is there any website? Is there a process that has been written anywhere? How can someone move forward?
So related to that, honestly, we've been actually waiting for guidelines from FTA on this, and as soon as we receive, of course, we can definitely share some guidelines on that. But so far, of course, there is no such thing with us that how to file, where to file, what form to file. But yes, we know what kind of information has to be there. So, for example, if it comes to the when filing the return, what has to be there, that is of course there. So for example, the tax period, you have to mention the tax period, you have to share the tax period, that this is my tax period. Then you have to put the date of submission, that has to be there. The accounting basis used in the financial statements, the taxable income within the taxable period, that has to be mentioned, of course. If there is any tax loss relief you have claimed, so that also has to be mentioned there specifically. If there is any transferred tax losses from a previous period or carried forward for the next period, so those also has to be, of course, reported properly. And everything which has to be related to corporate tax, that how you have derived your net income or net profit, of course, not net income, of course, net profits, how you came to that level. If there is any things you have adjusted, were there any kind of foreign tax credits, were there any kind of adjustable expenses or anything like that, so that has to be there, of course. And so this is the information so far with us, and we know that within few days or maybe few couple of weeks we will have, of course, new guidelines related to, of course, the registration method, the forms, what kind of information has to be put there, and everything, of course.
Got it. So yeah, so
Hopefully,
I think
a lot of information will get clear on the level of registration. As soon as we got all the information related to registration, hopefully a lot of things will be get clear by that time.
Got it. So Mariam, to answer your question, those guidelines, haven't been posted yet on where to file these taxes and any specific websites. But in general, you just need to be prepared in terms of having, by the IFRS standards, what kind of information you think would be relevant to show where your income streams are coming from, how much you're making, etc. But those websites and other information, hopefully by the next time that we all come together again, right, those information will be posted as well, and we'll be able to share more. One final question before we call it a day. Janex pointed out that she was actually relating VAT and corporate tax because eventually accountants will ask how to calculate taxable sales, right? Will it include the VAT amount on a gross amount or not, right? Any opinions there? We can also cover it at a later time if needed, but yeah, I'm just curious if you have any opinions there right now.
No, it's VAT is completely different. So for that has nothing to do. It's not a P&L item, we can say in very basic terms. VAT is a balance sheet item that can be, on the asset side, or it could be on the liability side, of course. So that has nothing to do with the P&L part. We are talking about the income being generated, or a corporate income being generated by a permanent establishment, or by a juridical person, of course, or a national person within the UAE, states. So that has to be calculated, and that has not to be, kind of linked or interchanged between the VAT or corporate tax. So both things are different entirely. Yes, VAT is actually on top of your sales. We understand that VAT is something which is related to your expenses, but that is not part of your calculation for corporate tax. That is entirely different. So both things has to be calculated separate. Both things has to be kept separate, of course. There has no link between that. And we understand that there could be some clarities, of course, required from the accounting point of view, from the other part. So that can be, of course, it's a different topic. We can discuss it, of course, in detail.
But still,
Absolutely.
Mr. Sakib, still there is a very much clear line in the corporate tax law that you cannot consider the VAT amount on the sales in your P&L. It is clearly mentioned there. So
Absolutely,
you
yes, yes.
have not considered
Oh,
the
but
VAT amount.
absolutely, absolutely, yeah.
That's a separate liability you are creating, and that's a separate asset on the purchases you are creating,
So it's
and
it's
you have to
very pretty
separate
much
them there.
straightforward. Yes,
Yeah.
that's true. So, for
Yes.
example, if you're getting 5% on top of your sales, that's your liability. That's not part of your income. So
Exactly.
it goes straight to your balance sheet. So yeah, both things are different, of course.
Got
Yeah.
it. Got it. Got it. Makes sense. Ahmed, to answer your question about, so Ahmed Reza had asked, is audit necessary before submitting the corporate tax? Ahmed, just to answer your question, at this point in time, audited financials is not necessary, right? It hasn't been part of the guidelines yet, right? But this is still TBD, right? It might change, it might not, but at this point in time, it's been there, right?
So
Uh, yeah, go on.
just to clarify more on this audit thing. So what we have actually, because we are partnered with most of the free zones within UAE, and we know how they are acting, what they are actually thinking ahead of corporate tax. So what we have heard from some of the free zones, they are already preparing the guidelines, and they are already preparing guidelines to be, for their companies or licenses registered with them to be audited every year. So from corporate tax point of view, there is no such restriction so far that it is required. No, it's not there.
Mhm.
But it could be, of course, as you mentioned, that there could be some implications of that thing. But from the authorities, the licensing authorities point of view, they are already started thinking that they might actually start asking the companies to submit the audited financials as part of their renewal process. But
Mhm.
if you go back to the just for the sake of knowledge of all the participants, of course, the LLCs, when it comes to the limited liability companies, so
Mhm.
based on the legal structures and laws within the UAE, it is mandatory to have to have the audited financials of the companies. But if nobody is asking, I understand people don't actually go into these on this road, but yes, now it will be important, of course.
Got it. Got it. Understood. Awesome. Looks like we are over time right now, right? And we had some few small questions. We'll try to answer that in the comment itself, right? I think Pranjal, we already covered the question that you're asking, which is, will VAT be forming a part of your P&L? And the answer is that VAT is considered as part of your liability, right? So it does need to be part of your P&L, right? But it will be part of your liabilities, right? Yeah, we're out of time right now, but Janix and Ashish and others who have asked other questions, please join us in the next event. Right, we will be hosting more of these. The next one will be happening in mid-January, right, in the New Year's. Right, we will also on January 13th. Right, so keep a
13th
lookout.
January, yes.
Yes. So keep a lookout for, the Pluto LinkedIn page. Follow it. Follow the SA Consultants LinkedIn page. Right. We will be posting it over there as well. Right. And hopefully we can answer more of your questions at that time. But Saqib, Mohammed, thank you so much for your time. Hopefully this was a very insightful discussion for the
Absolutely.
audience here, and really appreciate taking the time out. It was a great time having you on.
Thank you.
Wonderful.
Thank
Thank
you.
you so much
Thank
for
you so
having
much.
us,
Thank you
and
so
it
much.
was really wonderful. Thank you so much. Thank you so
Thank
much,
you so much.
everyone, for joining. Thank
Thank you
you.
so
Thanks,
much. And
everyone.
we'll post the links for the recording, and we'll also post the links to SC Consultants on the group chat.